Folks, as you know, One Rental at a Time is a different channel because we bring on experts with experience in areas I do not have. Here, we're going to talk to Matt, the mortgage guy. How you doing, buddy?
I'm doing good, Mike. How you doing?
So I don't know if you heard, but on March 17th, I made a very bold call that by April 15th, we were going to see rates below 6% for the following buyer: owner occupant, best credit, 20 or 25% down. At the time, rates were very close to 7%. So, how'd I do? Where are we now on April 5th? Did my call happen or not quite yet?
Crushed it, crushed it. Yeah, we're definitely locking them, and it's funny too because it seems like even more of an impressive call because like we were seeing sevens.
Yes,
Last month
exactly.
it got pretty gnarly, and as much as things are volatile and pop up and down, it's a pretty dramatic ride down over the last few weeks. I'm looking. I wanted to pull up like the average on Mortgage News Daily. Wow. Yeah. They're down to 6.16 because like me and you were talking about as a
So again,
broker.
so hold on. So Mortgage News Daily is quoting 30, the average 30-year money is 6.16.
Yeah. And that was 7.1 early March 2nd, 7.1. So a
Yeah.
full percent like
A month.
month on month.
So again, I called it early. It's part of how I changed my thesis post SVB. And once again, folks, give me my flowers. We nailed it. It happened.
Now you need lower for longer so that your average for the year is under 6%, which I, if I was a betting man, and I am sometimes,
It has happened.
play some occasional poker. I would say that we'll probably be there. And this is something that I talk about with clients. It won't be a straight line, but a lot of the things that influence mortgage interest rates, downward pressure on them is happening. The 10-year treasury is down. We see inflation coming down. We see different things happening that are going to allow the Fed to
Stop
stop hiking
raising.
rates. Yeah,
Exactly. Then the margin comes in and easily get under 6%.
right. And then we're less volatile. And so that spread between the 10-year, all of it is happening. Kind of like you talked about, I've talked about it a little bit as well, where, hang tight. I made a video recently where I'm rooting for this, Mike. I just don't want it to happen too fast. We've
Right.
already got too much demand for the amount of supply we have on the market. And, in another video, we can talk about how dramatically insane it is for entry-level buyers. But for this video, for this topic on rates, don't expect rates to be 5% next week or the week after. But over time, as we continue to get data that says, oh, maybe the job market isn't as strong as we thought. Maybe inflation is coming down and some of the data is lagging. All these things continue to happen, like those of us who pay attention to it probably see a little bit of the future, and rates will slowly trickle down. It will be, from 6.16 to 6.08 to 6.11 to 6.03. They don't go straight down, but over time, we see a downward trend in the future.
Yeah. So actually, I said this on the daily financial news this morning. This is my greatest fear. So again, I called sub 6. It happened. My greatest fear is we get to 5.5. And I think 5.5 is the worst number for the real estate market, because what happens at 5.5? It unlocks another trove of buyers, but it doesn't bring supply. You and I have talked about supply doesn't come back till at least 4.5. So if we get to 5.5, demand skyrockets into, we're 20% below new listings. We're at record low levels. There's a bifurcation in the market. All of these people talking about, hey, look at housing is up, 40% from last year. You guys are looking at the wrong numbers. Most of that is luxury. Most of that is new builds being listed that weren't listed last year. You guys aren't in the weeds. The first time home buyer entry level home is bananas. And we're going to talk about that in episode number 2. I would love for rates to kind of even out at 5.9. But if they go to 5.5, oh, not a good feeling. That's where I'm currently
I
at.
totally agree. And like, now that you said it, I just had this little epiphany where, you know, those entry level homes, generally speaking, are the rental properties. You
Yes.
know, because you buy them for less, and so everybody that I've worked with on the investor side who bought something like that. I mean, I got a 2.875 mic on an investment property, single family residence in August of 21.
Mm-hmm.
It would be dumb of me to ever sell that property.
Exactly.
And so, you know, that's one of those things where, like, there's no rate out there that would ever have me sell something that I've got a monthly locked in payment of $2,100 that is going to continue to bring in rent. Rents will continue to go up. And if somebody bought that similar property at today's rates, their payment would be over $1,000 more expensive.
Exactly. Exactly. Yeah. So again, this is a rate call. The rates are going the way I expected them. They happen for the reasons I thought they would. I do hope, because again, I want the housing market to just chill out. I do fear that we will overshoot again and we'll go from 5.9, which is I hope we stop, to 5.5. 5.5 would be no bueno, no good. Demand, it would be ungood. But if somebody wanted to get some of this 5% money, which a lot of one rental at a times fans can, they should reach out to you and the team. How should they do that?
Come get it. We're licensed in 46 states. Greatmortgagebroker.com. Fill out that
Yep.
quick form and we'll connect you with a loan officer who's licensed in your state, ready to help. You know, my team's got licenses in 46 states. Greatmortgagebroker.com.
Yep. Give him a shot. He'll help you. Thanks, buddy.